Edtech startup Byju. The latest, there are two pieces of information, ladies and gentlemen, this morning when you want to understand what's happening as far as the latest with Byju is concerned. One is the fact that the allegation on them that they haven't paid their provident fund dues to their employees or deposited the employer's contribution of the provident fund. Those allegations have been made by ex-staff members, and now we understand that Byju has transferred over 100 crore rupees to the EPFO or the employer's provident fund account, and then has cleared those dues. That's the statements coming in from Byju. They have cleared the PF dues of their employees. That's one part of the story. The other bigger part of the story is Byju and its valuation. Bear in mind, Byju was the most valuable startup that India has ever seen. $22 billion. $22 billion is where the highest valuation it hit at one stage. And guess where it is today right now? Right now, it's being valued at just a little over $5 billion. Kartik Malhotra has all the details on that. Kartik, talk to us. You're talking about a Dutch valuation company. It has written off its investment into Zest Money, completely saying that entire investment is BS, so to speak, and has also cut down the valuations, called the valuation itself BS, saying that 22, what are you talking about? At best 5.
Right, so let's look at it in context. Number one, Byju and the controversies surrounding Byju refuse to die down.
Yep.
And I think it is fairly clear that there are eminent corporate governance issues at play at Byju, due to which its earlier auditor Deloitte also resigned last week, and it has a new auditor now, but its books have not really been audited for the last 2.5 years, and the suggestions made by Deloitte to Byju to adjust certain figures in the previously audited books have also not yet been done. So that is a larger context. Add to that the misery of the whole edtech sector, with the opening up of the economy and learning from home ceasing to exist and schools reopening. So that came as a body blow to the entire sector, not just Byju alone. But on top of that, you had Byju's leverage to about $1.2 billion. Now this is not valuation related, this is pure cash taken from lenders to deploy in business operations. Remember, valuation is something on the books.
Yes.
It looks pretty. It doesn't technically give you hard cash to run operations. So to run operations,
it's the opposite of cash.
Yeah.
Valuation is the opposite of cash. There's nothing exists. It exists as an opinion after a point, as a perception.
And on your books, it is a balance sheet number. It is something which is
exactly.
your liability to your shareholders, right?
It's everything but cash.
Yeah. So a $1.2 billion loan taken, not yet serviced, and given the fact that the books have not been audited, it shows a very clear picture that maybe Byju does not have the money to repay that loan. Now add to this, and I'll come to the valuation story, add to this, there's a Bloomberg report last evening which states that Byju is now in talks with new investors looking to raise another $1 billion. Existing investors have refused to add more currency into the company. So Byju is in talks with fresh investors. The report did not cite who those investors or prospective investors are, but it's looking to raise another $1 billion in funds. Now this $1 billion comes on what valuation? One doesn't know, because till the end of the last financial year, Byju was India's most valuable company, pegged at $22 billion. Cut to the month of April, the valuation halved to about $11 billion. Now, in the month of May, BlackRock did not through a fresh round of fund infusion into Byju, but the stock that it had on its own books for its investments in Byju wrote off the value to about $8.4 billion. So it devalued Byju from $22 billion, wiped off 2/3 of the valuation to $8.4 billion. And now this Dutch investor Proces has written off its value of 9.6% stake that it holds in Byju to about 493 million. Which means, extrapolate that data, it suggests that the value of Byju, given the dollar-rupee conversion, could be anything between 5 to 5.6, $5.7 billion. So that fall from grace from $22 billion to a book value on the books of investors to about 5.6 billion shows that investors have pretty much lost faith in Byju's ever being in a position to make money for the investors who had parked their money.
Well, and Kartik, I'm sure it wouldn't have missed anybody who opened social media this morning about the famous filmmaker Hansal Mehta speaking about Byju's. In case you guys haven't seen it, Hansal Mehta, ladies and gentlemen, is the filmmaker who made Scam 1992, and also recently the much famous Scoop as well. And this one, and late last night around 1-2 o'clock, he tweeted that saying that he had called out Byju's a long time ago because there were representatives from Byju's who came to his house and was in a sense forcing his daughter to take up some of their courses, and in fact telling their daughter how she's actually not capable of of doing certain things, and she will need the Byju's courses to be fully competitive.
Yeah, that's the kind of push we've seen. And and this is Hansal Mehta you're talking about. But imagine the plight of the thousands and lakhs of students who enrolled to take the Byju's courses, and the kind of forced selling that happened, the cross-selling and the upselling by way of offering laptops and tablets and extended courses, and really creating the sense of fear and panic among parents that your child is actually not worth anything until or unless they enroll themselves in a Byju's course.
Or a white hat.
Or a white hat junior for that matter. Coding. Hey, it's oxygen. What will your child do without coding? That is the kind of message being thrown out that, and this is in the peak of the pandemic again. So, you'd rather have a thermometer, an oximeter at home and a Byju's course. So it was almost an essential being sold to students. So yeah, I mean, and in the previous shows that we've done around Byju's, look at the comment section, and I'll request our viewers also to go and search for the Byju's stories that we've broken previously. The comment sections are inundated with people who are coming out publicly and stating how badly they've been fleeced by the company. So there are for sure corporate governance issues at play. It does not have cash on its books, and hence there is major cost cutting across functions, pink slips to people, laying off, as well as, of course, the $1.2 billion loan, which they've been unable to pay for a while. And on back of that, existing investors cutting down on their valuations.
Incredible that the one story that really got them all the prominence was the total value or the worth of their business, their valuation. What is the valuation? This is a business that Byju's has started in the edtech sector. This is the potential and this is the value, the valuation. And Byju's big headline was the fact that people thought, looking at the future, looking at the online future, the valuations, that's where the valuations came in at $22 billion, and now it's down to just about $5.5 billion. And the more important part is that, I continue with what Hansal was talking about, he in fact drove the Byju's executives out of the house by the time they were done trying to force their kid to take it up, and then he had tweeted about it back then. And he got a major backlash, saying that how dare, the online is the future of our children's education, Byju's is a great Indian company, you shouldn't say anything against the company, and he was forced to even take down those tweets. And then he tweeted last night saying that now talk to me. Now talk to me. The Byju's story has been stinking to high heavens as far as I'm concerned for the longest time. At least that's the message coming in from Hansal Mehta.
And the Bloomberg report that I was referring to earlier also suggests, and that's an interesting point again, that existing shareholders now want to renegotiate the terms of engagement with Byju Ravindran himself, stating that they want to withdraw the right of first refusal for any fresh capital infusion which Byju Ravindran has presently. They want that withdrawn. So the Bloomberg report states that there is this talk among the existing investors that any new investment coming, the right of first refusal should not, or the right of liquidation of existing investors should not rest with Byju Ravindran alone. So there is mounting trouble for the man and the business that he has built.
And remember, the board right now comprises of nobody else apart from Byju Ravindran, his wife Divya Gokulnath, and Byju Ravindran's brother Riju Ravindran. There are exactly 3 people, all family members on the board. The only piece of silver lining over here, Kartik, is that I'm glad that they've made they've transferred 123 crore rupees to the EPF, or Employees Provident Fund Organization, which means that all the PF dues of ex-employees and current employees, I'm hoping, gets cleared with that transfer.
But that's law. That is required to be done. It's a pity it wasn't done up until now. So yeah, I mean, we are glad you haven't sort of, been a fly-by-night operator and walked away with those 123 crores packed in a suitcase. But this was to be done, and this should have been done all along.
Right. Let's get a quick comment on this from Rakesh as well. Rakesh, we've been tracking this story for a very long time. Look at where it stands right now. Valuation down to $5 billion, struggling to even pay back the Provident Fund dues.
I mean, you rightly pointed out the corporate misgovernance, but I think there is a case for very, very strong misgovernance at the regulatory framework as well. I, for one, have always advocated a light touch regulation when it comes to new age companies and especially in the tech space. But, all of us have to revise our premise. And, if Byju's is an example, how can you sleep over not paying EPFO, contribution of your employees to the fund organization? And how can fund organization not flag it all this while? And there is a serious, unfortunately, oversight and lapse at the regulatory framework, both at the corporate affairs ministry, and it calls for some very considered and concerted action on behalf of all diverse stakeholders. I mean, Byju has got it wrong. Obviously, we know it now, and it has made mistakes. It continues to make mistakes, and its corporate governance, this governance actually is matched by the regulatory, I think, oversight in this case, which points to the need for an urgent re-examination of the startup space when it comes to regulation. I think as you probe further, you will see more and more skeletons coming out, and one could have sort of say provided for the business model going kaput once COVID went over. But it's a story which has so many more challenges to overcome. And obviously, the Hansel Mehta example that you gave is an example of the direct B2C connect, where it has discomforted not just Hansel Mehta and his family, but many more people who were forced to get into this new age trance brought about by the technology dream, have this tablet, have this course, and pushing for this coding as a new science for growth of the mind. I think all that cumulatively points to a collective failure.
All right.
And I would say even media, we all fettered the gentleman and the ecosystem. We continue to do that. We have our own failures as well.
So we will fetch something when the valuations are so good. We're only happy that an Indian company, made in India company, is doing so well, is getting all the investments from abroad, and is being seen, being a positive light, of course. But we also tell the truth when the same investors don't see that value in Byju's. We tell that story as well right here with you in Tosa. Stay with us because I want to ask you one more thing.
I mean, one Krishna, all investors who have invested are equally to blame. If they condone, as I said, the regulators need to have come in. All investors who are valuating at a certain price and cutting down by half and a quarter, they are equally to be blamed. They're the first, as we call in our journalism, the first reader of that story, the sub-editor. In this case, the first reader of the business plan. They should have raised flags. They should have, asked for examination in public space. They might have done in the private, but obviously they didn't do it in the public space to merit Byju's for a course correction.